Okay, we have to talk about this crazy situation. Venezuela is sitting on more oil than any other country on Earth. More than Saudi Arabia, more than the US, and more than Canada. If they pumped out oil at full capacity, they could keep going for over 2 centuries before running out. But instead of being one of the richest countries in the world, Venezuela is broke. And I don't mean the tough economy kind of broke. I mean hyperinflation through the roof, people fleeing the country by the millions, and grocery stores with empty shelves kind of broke. It's simply a full-blown economic meltdown. Things got even worse when Donald Trump got into office in 2016, as his administration took a much harsher stance against Maduro. His administration slapped heavy sanctions on them, making it nearly impossible to sell their oil legally. And with his second term, Venezuela will be expecting even more sanctions. As Trump stated, he and his administration rejects the legitimacy of Maduro's presidency. So now Venezuela is trying to pull off shady deals with China, Russia, and Iran just to keep the money coming in. But even that isn't working, because the refineries are falling apart, their pipelines are leaking, and global demand for Venezuelan oil is drying up. So how did it get this bad? Why can't Venezuela sell its oil like every other oil-rich country? And more importantly, can they ever fix this mess? Now, before we dive into this, please be sure to hit that like button down below. It helps us out tremendously and allows us to keep covering topics like this. Thank you. The numbers alone say enough. Venezuela sold 3.5 million barrels of oil per day in the 1970s. But in 2020, this decreased to just 600,000. And if we look at even more recent data, the situation is grimmer, with 400,000 barrels per day as of 2025. At its peak, Venezuela was one of the world's largest oil producers. Today, it struggles to even meet domestic demand for fuel. This is a shame considering its oil wealth. The Orinoco Belt alone holds an estimated 1.2 trillion barrels of heavy crude, more than enough to power the country's economy for centuries. Yet those reserves remain largely untapped, locked beneath the surface while the country descends deeper into national crisis. The big question is, how did this happen? To understand this, we need to look at a bit of Venezuela's history. Before oil, Venezuela was never particularly prosperous. It was home to indigenous civilizations for centuries, and later became part of the Spanish Empire. Venezuela was never seen as a particularly wealthy colony compared to silver-rich Peru or Colombia with its gold. After gaining independence from Spain in 1821, Venezuela faced political turmoil, civil wars, and economic instability. Then came the discovery that changed everything. In 1914, oil was found near Lake Maracaibo. While it took a few years for production to ramp up, Venezuela was on its way to become a major oil player by the 1920s. Foreign companies, mainly from the US and Britain, rushed in to develop the industry, and the money started flowing. By the 1930s, Venezuela was the world's second largest oil producer, and by the 1950s, it was the fourth largest oil producer in the world. The country transformed almost overnight from an agricultural economy to an oil powerhouse. The government benefited massively from taxes and royalties paid by foreign oil companies, and by the mid-20th century, Venezuela was the richest country in Latin America, with a standard of living that rivaled some European nations. Caracas became a symbol of modernity in Latin America, filled with skyscrapers, luxury cars, and a growing middle class. But there was a problem. Unlike other oil-rich nations that used their wealth to build strong economies with diversified industries, Venezuela became dangerously dependent on oil. And I mean extremely dependent. The government spent heavily on infrastructure and social programs, assuming that high oil prices would just last forever. Meanwhile, industries outside of oil were neglected. While other oil countries such as Saudi Arabia and the US invested in things like refining and petrochemicals, Venezuela remained a one-trick pony, relying almost entirely on crude exports to the world. And in the 1970s, the Venezuelan government became even more overconfident. In 1976, it nationalized the industry, creating the state-owned company Petróleos de Venezuela, PDVSA. The move was part of a larger wave of nationalization across Latin America, where governments sought to reduce foreign influence and keep resource wealth within their own borders. At first, it seemed like a smart decision. The government had full control over production and profits, and with oil prices soaring, Venezuela entered another period of prosperity. But the warning signs were already there. Instead of using oil wealth to build a stable economy, Venezuelan leaders spent generously on social programs, subsidies, and a massive amount on public sector jobs, all while ignoring the need for long-term investment investments and growth. The PDVSA, which was one of the most efficient oil companies in the world, became increasingly politicized, filled with government loyalists rather than experienced industry professionals. Corruption and inefficiency grew, but as long as oil prices stayed high, the problems remained hidden. Then the 1980s arrived, and the global oil market crashed. This crash happened because new oil suppliers entered the market and because OPEC failed. OPEC is basically a cartel of major oil suppliers who attempt to control oil prices by limiting the supply of oil. In theory, this would make oil very profitable as OPEC acts as a monopoly. But in the 1970s and 1980s, non-OPEC countries like the US, the UK, Norway, and Mexico began to increase oil production until they eventually surpassed OPEC in market share. The US in particular had no regard for oil prices because it's a major oil consumer, so it just flooded the market to decrease prices. OPEC initially tried to compensate for this by cutting production nearly in half, but it didn't work. Some OPEC members, including Venezuela, cheated on their quotas and sold more oil than the cartel allowed. Also, the non-OPEC supply was just getting too big to make the price level sustainable. So in 1986, Saudi Arabia decided it was enough, and it deliberately flooded the market with cheap oil, sinking the price from the $35 peak in 1980 down to below $10. There's one key metric to understand here, and that's the production cost per barrel. All oil reserves are different, and extraction costs vary dramatically across countries. In Saudi Arabia, extracting oil costs about $6 per barrel, where it's $10 to $12 in Venezuela. Apart from Kuwait and maybe Iraq, Saudi Arabia is the cheapest country to get oil out of the ground. So when OPEC got squeezed and OPEC members like Venezuela didn't play by the rules, Saudi Arabia just dumped the prices. This allowed Saudi Arabia to regain market share at the expense of Venezuela. This sudden shift was terrible for the Venezuelan government. The country fell into debt and the economy spiraled into a deep crisis. Suddenly, the government couldn't afford its massive spending, and the weaknesses of an oil-dependent economy were exposed. The International Monetary Fund, the IMF, stepped in with loans, but they came with strict conditions, forcing Venezuela to cut subsidies and social programs. This led to widespread unrest, protests, and a growing dissatisfaction with the political establishment. But the misery did not stop here, as the situation only worsened in the 1990s. The oil prices continued to be relatively low, putting pressure on the government budget. Meanwhile, inflation peaked at 100% in 1996 due to government money printing. Wages didn't keep up, and 2/3 of the population were living in poverty at some point. What happened during Venezuela's recession was the rise of Hugo Chavez, a former military officer who promised to take back control of Venezuela's wealth and use it to help the poor. Elected in 1998, Chavez really went radical in terms of governance. He doubled down on nationalization, pushing out foreign investors and strengthening state control over the PDVSA. Luckily for him, the economic situation improved, with oil prices nearly doubling due to strong global economic growth. But Chavez didn't learn from previous mistakes. He used the high oil prices in the 2000s to fund ambitious social programs, including free healthcare, education, and food subsidies. For a while, it seemed like he had cracked the code. Venezuela's economy was booming again, and poverty rates were falling. But the underlying problems never went away. Instead of investing in infrastructure, refining capacity, or other industries, Chavez continued the same reckless government spending habits of past governments. Even worse, he fired thousands of skilled workers at the national oil company and replaced them with his political allies. Oil production started to decline, but since prices were still high, few people really noticed. And then came the inevitable crash, with the global oil price collapse in 2014. The main reason for the crash was the shale revolution in the US. This new way of getting oil out of the ground quickly made the US the largest oil producer globally. Once again, the US pushed for lower oil prices to help its economy. And similar to the 1980s, Saudi Arabia responded by pumping out even more oil to defend its market share. As a result, oil prices halved, and Venezuela was completely unprepared. With no savings, no diversified economy, and a crumbling oil industry, the country fell into a catastrophic economic crisis once again. But Chavez was already gone. He died in 2013 of cancer, in the illusion that he left his country in a good state. But the damage was already done. Venezuela's oil production had fallen from over 3 million barrels per day in the 1990s to less than 1 million in recent years. PDVSA was in shambles. Meanwhile, US sanctions made it even harder for Venezuela to sell its oil, cutting off access to key markets. From this turmoil, it was Nicolás Maduro who rose to power as the successor of Hugo Chavez. Before becoming president, Maduro served as Chávez's vice president and had a background as a bus driver and a union leader. After Chávez passed away, Maduro won a highly contested 2013 election against Enrique Capriles, amid accusations of fraud from the media and critics. And their claims might have had some truth to it because Maduro began to consolidate power through control over the Supreme Court and the military. Later on in his presidency, he even won more controversial elections. A key strategy in Maduro's administration was a radically different approach on government spending. Maduro's predecessors also printed a lot of money, but Maduro took it to a whole nother level to cover the budget deficit when the oil prices dropped. But creating money out of thin air through government debt doesn't work. This is not very complicated. If you pump a ton of money into the economy, it just means that prices go up, and they sure did. Hyperinflation set in with 69% inflation in Maduro's first year. In 2015, it went up to 181%, a record rate for Venezuela. But it was peanuts compared with what was about to come. Inflation went to 800%, 4,000%, 1.7 million%, and finally 2 million% in 2019. Now, we'll cover all of this later, as it also relates to US sanctions from 2017 that were intended to cripple Maduro's regime. But first, we need to talk about the collapse of Venezuela's oil industry, which was ongoing long before the US ever got involved. And one thing is for sure, it wasn't just low oil prices that caused this. Let's begin with the refineries. Today, oil refineries like the Amua and Cardón refineries are shadows of their former selves. They used to be a source of national pride. Now they're barely operational. Venezuela's oil refining capacity underwent chronic underinvestment, which has left these facilities operating at a fraction of their capacity. Maintenance schedules were ignored for years, and vital upgrades were delayed indefinitely. The result? Explosions, fires, and shutdowns have become disturbingly common, crippling the industry's ability to process crude oil into valuable products like gasoline and diesel. And oil wells, the literal source of Venezuela's wealth, have not fared much better. Many of the country's wells date back decades. And while older wells can remain productive with proper upkeep, that's precisely what Venezuela's state-owned oil companies failed to provide. A lack of reinvestment in maintaining wells has led to a declining output, while pipelines that once transported oil efficiently now leak and corrode. Shipping facilities, which are crucial for exporting crude, have also gotten worse over time. The reasons behind this collapse are complex, but not entirely mysterious. If I had to name one word that caused Venezuela's downfall, it would be corruption within the PDVSA and the government. As we already discussed before in this video, this wasn't just a company. It was the lifeblood of the nation, responsible for generating over 90% of the country's foreign revenue at its peak. To understand the scale of corruption within PDVSA, we must look at how the company was run under Maduro's regime. Because what should have been a professionally managed enterprise devolved into a political tool. Chavez already did this, but Maduro took it to another level. Under normal circumstances, contracts for drilling, exploration, and refining would go to the most qualified companies. Instead, they went to Maduro's allies and cronies. Top positions at PDVSA were no longer awarded based on expertise, but rather handed to political loyalists with no experience in the oil business. Firms with little to no understanding of the oil sector suddenly found themselves tasked with critical projects. Many of these companies lacked the basic technical know-how and resources to deliver, leading to delays, cost overruns, and outright failures that were caused by humans. Engineers and industry veterans were replaced with party loyalists, many of whom viewed their roles as opportunities to enrich themselves rather than to strengthen the company. It was simply a cash cow, with profits directed to the inner circle of Maduro. Corruption at the highest levels siphoned off billions of dollars, which disappeared into offshore accounts or was used to fund political projects. And things like social programs, housing initiatives, and military spending were prioritized, but not to make the country a better place, but to ensure loyalty. And the consequences? Pipelines corroded, refineries had to be shut down, and entire oil fields were just abandoned. Power outages and widespread blackouts have disrupted operations at refineries, oil wells, and export terminals, creating bottlenecks and delays. In an industry that relies on constant flow and precision, even brief interruptions cause significant setbacks. Export capabilities were also affected. Without functional infrastructure or reliable shipping facilities, Venezuela couldn't keep this whole system running. This decline in efficiency and reliability had ripple effects throughout the global oil market. Venezuela's heavy crude, decades ago a staple for refineries in the United States and elsewhere, became harder to sell. Buyers turned to more reliable suppliers, further isolating Venezuela from international markets. To stay afloat, the country resorted to selling oil at steep discounts, which we'll discuss in a moment. But first, we have to cover Maduro's growing authoritarian rule, which is the fundamental reason why all this corruption exists. In Venezuela, there are no checks and balances anymore. Any criticism of the national oil company's management is met with swift repression, and whistleblowers risk imprisonment, torture, or even assassination. And as we discussed earlier, Maduro has weaponized the judiciary and the military to crush dissent, ensuring that his grip on power remains unchallenged. Since the mass protests of 2014 and 2017, the regime has violently cracked down on opposition movements, arresting thousands of demonstrators and torturing political prisoners. Security forces, including the Bolivarian National Guard and the SEBIN, the intelligence police, have been documented using live ammunition, arbitrary detentions, and forced disappearances to silent dissent. According to human rights organizations, over 300 political prisoners remain behind bars today, and many others have been forced into exile. At the same time, Maduro's propaganda machine has attempted to mask the country's economic collapse. Independent media has been almost entirely wiped out. Newspapers and TV stations have been shut down or taken over, and journalists who criticize the regime face harassment, imprisonment, or exile. Meanwhile, state-controlled media outlets continuously broadcast pro-government rhetoric, portraying the opposition as imperialist agents and blaming the crisis on US sanctions rather than on the government's own disastrous policies. Now, he's right that US sanctions have hurt Venezuela's economy. Back in 2017, the US government decided to go all in on Venezuela's oil industry. It slapped some of the toughest sanctions ever seen on the country's state-owned oil company. The reason why the US did this was pretty simple. President Trump wanted to cut off Maduro's cash flow, isolate his government, and basically push him out of power. Trump didn't want to help a socialist dictator by buying his oil while he's ripping off his own population. Anyone can see that Venezuela needs a complete overhaul of its government and its oil company before it can move forward. As long as Maduro remains in power, it's hard to imagine such reforms taking place. So, to hurt Maduro, the US stopped its oil purchases, froze PDVSA assets, blocked transactions, and made sure no US companies could do business with them. Before these sanctions, the US bought a lot of Venezuela's oil, importing nearly 500,000 barrels per day in 2017. But once the sanctions took effect, this revenue stream collapsed almost overnight. By 2020, US imports of Venezuelan crude had fallen to virtually zero. And just like that, Maduro's biggest revenue stream was gone. Venezuela found itself unable to purchase critical components needed to keep its oil industry running, because most of these things are made in the US. Pumps, valves, and drilling equipment became impossible to replace, leading to a slow but steady breakdown of operations. Even when parts could be sourced through third parties or black markets, the costs were exorbitant, further straining an already cash-strapped PDVSA. But it didn't stop there. Any foreign company that wanted to deal with Venezuelan oil had to think twice, because secondary sanctions meant they could get blacklisted too. So Venezuela was almost completely locked out of the global oil market. And these sanctions had an effect. Between 2017 and 2020, Venezuela was in total freefall. The country wasn't just in crisis, it was falling apart at every level. With oil revenue collapsing, the government had no way to fund its already failing economy. So it turned to even more money printing. Inflation skyrocketed past 1.7 million% in 2018, making the bolivar so worthless that people were weighing stacks of cash instead of counting it. Meanwhile, the vast majority of Venezuelans entered poverty during the crisis. At its 2019 peak, 96% of Venezuelans were living below the poverty line. Only 1 in 25 people had enough money to sustain themselves. Salaries became meaningless. What someone earned in a month couldn't even buy you a loaf of bread. Meanwhile, food and medicine disappeared from store shelves. Hospitals ran out of basic supplies, forcing doctors to perform surgeries without anesthesia or proper equipment. People were sifting through garbage for scraps just to survive. A very shocking and tragic figure is that the average Venezuelan lost 24 pounds of body weight in a single year because they couldn't buy enough food. Electricity blackouts hit the entire country, sometimes lasting for days, shutting down hospitals, businesses, and even water systems, meaning people can't even get clean drinking water. The capital, Caracas, turned into a ghost town at night, with streets empty except for armed security forces who cracked down on protesters. The crisis was so severe that millions of Venezuelans had no choice but to leave. By early 2019, over 4 million had fled, walking for days across borders into Colombia, Brazil, Peru, and beyond, desperately searching for food, work, and safety. By 2024, that number would reach 7.7 million, one of the biggest refugee crises in modern history. And for a moment, it looked like Maduro might actually fall. In early 2019, opposition leader Juan Guaidó declared himself interim president, gaining recognition from over 50 countries, including the US. Mass protests erupted, and for the first time, Maduro's grip on power seemed shaky. But with military loyalty brought through corruption and repression, and help from allies like Russia and Cuba, he managed to hold on, crushing protests, jailing opposition figures, and tightening his dictatorship even further. The country was absolutely broken, but the regime survived because of its allies. And with US buyers out of the picture, Venezuela sought out new buyers for its oil. They started making oil for goods deals with massive discounts of 30% or more off of market rates. Instead of getting paid in dollars, which was nearly impossible because of the financial restrictions, they traded crude oil for food, medicine, and other essentials. The list of nations who joined this oil for goods program isn't hard to guess. They are China, Iran, Russia, and Cuba. For China, Venezuelan oil has become a key component of its energy strategy. The country, with a population of over 1.4 billion, has become the biggest energy consumer in the world, and it doesn't have many oil reserves at home. It must scrape oil from markets like Venezuela to keep up with its growing oil demand. Apart from oil for goods programs, China has also structured deals that involve debt repayment through crude shipments, a model that sidesteps traditional finance systems. The same goes for Iran, which shares Venezuela's disdain for US sanctions. But Iran's reason for buying Venezuelan oil is interesting. Iran doesn't actually use Venezuelan oil. It already has plenty of its own. Instead, it helps Venezuela dodge US sanctions by acting as a middleman. Iran sends Venezuela gasoline and refinery supplies, which Venezuela desperately needs since its own oil infrastructure is falling apart. In return, Venezuela ships crude oil to Iran at a discount, which it then resells on the global market, often disguised as its own origin to avoid sanctions. Sometimes they even mix Venezuelan oil with Iranian crude to make it even harder to track. It's less about Iran needing the oil and more about both countries cooperating on oil for refinery parts exchanges, an arrangement that benefits both while thumbing their noses at Washington. YouTube just dropped a mind-boggling announcement. It is paying creators $64 million per day. Why? Well, because YouTube doesn't have enough creators. That is why you see videos on your homepage that have less than 1,000 views, like this one. Now, of course, that doesn't mean everyone should start a channel, but if you've ever wondered about starting a YouTube channel or a faceless channel, now's kind of the perfect time. YouTube is paying creators millions every day, and it's pushing newer, smaller channels now more than ever. But I'm sure you have many questions on how to get started and grow a channel. We get questions in our email all the time from some of you guys. And that's why we've decided to put all of our YouTube advice into one YouTube video for completely free. So, if you are someone who's interested in starting your own YouTube channel, you can watch that video here on YouTube by clicking on the link in the description or the card on your screen. Then there's Russia. A longtime ally of Maduro's government, Moscow has helped Venezuela move its oil under the radar. Russian companies have acted as intermediaries, facilitating the resale of Venezuelan crude to markets that would otherwise avoid it. Cuba, meanwhile, is a unique case. This island nation doesn't pay for Venezuelan oil in cash, but provides services like healthcare and education in return. The relationship is more than transactional in this case with Venezuela. Its partnership is born out of a shared socialist ideology. But how does the oil actually get to these buyers? That's where the so-called shadow fleets come in. These are fleets of aging oil tankers, often registered under obscure flags of convenience and operated by shell companies. Their purpose is simple: evade detection. Shadow fleets engage in tactics like turning off transponders, conducting ship-to-ship transfers in international waters, and falsifying documentation to obscure the oil's origin. These methods have proven surprisingly effective. This use of shadow fleets isn't unique to Venezuela. It's a tactic Iran and Russia have also employed. But this fleet has definitely become indispensable for Caracas. Venezuela can now bypass traditional shipping channels and sell its oil discreetly. However, the risks are high. Aging tankers are more prone to accidents, and any misstep could lead to environmental disasters. There's also the risk of international enforcement actions, such as American patrols in the water at every edge of the world. For Venezuela, this whole business worked to an extent, but the current oil revenue is nothing compared to what PDVSA used to make before these sanctions. Profit margins declined, production kept dropping, infrastructure kept falling apart, and the country's economy, which was already in freefall, got even worse. But still, for Maduro's government, the discounted oil sales are a lifeline. They provide the hard currency needed to keep the regime just above water. But they're not a long-term solution. Every barrel sold at a discount shows the hard truth of Venezuela's lost potential. Oil should have been the country's ticket to prosperity. Instead, it has become an Achilles heel. But then, Trump lost in 2020. Biden came in, and there was a shift in policies. The Biden administration was a little more open to easing restrictions, especially after the Russia-Ukraine war shook up global oil markets. There were talks, negotiations, and even temporary licenses granted to let Venezuela sell some oil under certain conditions. It was looking like things would improve for Maduro after 2020. Plus, Chevron, the American multinational energy corporation, made a comeback in 2022, which was a huge deal. After years of sanctions shutting down U.S. involvement in Venezuela's oil industry, the Biden administration gave Chevron the green light to restart operations under tight restrictions. This meant Venezuela could finally export some oil to the US, again, bringing in much-needed cash. But clearly, it wasn't enough to save Maduro. By the end of 2023, the crisis had been exacerbated, with the inflation rate climbing back to more than 500%. Cash is so devalued that bartering has become a more common means of trade in rural areas. With this economic collapse, it has triggered widespread food scarcity. According to a 2024 report from the United Nations, over 75% of Venezuelans are food insecure, and malnutrition rates among children have reached alarming levels according to the WEF. Healthcare has not fared any better. Hospitals are still in a state of collapse, lacking basic medicines, equipment, and even running water. This can be a death sentence for Venezuelans suffering from chronic diseases. And illnesses that were once under control, such as malaria and tuberculosis, have made a vicious comeback. Fast forward to today. Trump is once again back in office, picking up where he left off. To understand what his new policies might be, let's watch this clip.
We want to do something with Venezuela. I've been a very big opponent of Venezuela and Maduro. They've treated us not so good, but they've treated, more importantly, the Venezuelan people.
The new administration has already signaled they're going to reinstate the toughest sanctions on Venezuela and make sure no Venezuelan oil hits the global market without consequences. The new president is not going to recognize Maduro's regime, pointing to the mass exodus of Venezuelan refugees as proof of a failed state. Trump also claimed that Biden brought Maduro back to life because he was nearly finished in 2019, but then saved by loosened trade restrictions. In early 2024, he declared that the ongoing plight of Venezuelans was a tragic example of how socialism and corruption destroys nations. It's a good observation, considering that Venezuela was once Latin America's crown jewel, a nation so rich in oil that its citizens used to call it the Saudi Arabia of South America. Ideally, Trump would want Venezuela to return to normal, which would allow the Venezuelan migrants to return from the US. He's already making headlines for resuming deportation flights to Venezuela, something that hasn't happened in years. Just recently, around 200 Venezuelans, including some flagged as gang members, were put on a plane back to Caracas. The Maduro government initially refused to accept deportees, arguing that it was US sanctions that were making things unlivable in Venezuela. But Trump gave some political bargaining chips to Maduro, and the two reached an agreement. Another major policy shift under Trump 2.0 is his decision to end temporary protected status, TPS, for Venezuelans in the US. There are about 348,000 Venezuelans who have been relying on TPS to stay in the country legally. And now, with that protection status set to expire in April, thousands of people are at risk of deportation. And that's a big deal, not just for them, but for Venezuela itself. Remittance from Venezuelans abroad have become one of the country's biggest sources of foreign revenue, bringing them over $4 billion a year, even rivaling what's left of oil exports. Cutting that off could hit the normal citizens of Venezuela when they are already struggling hard. Thus, immigration advocates are already pushing back. Lawsuits are likely coming, and the situation is turning into a political fight. But Trump is sticking to his stance, making it clear that he wants stricter immigration enforcement, especially when it comes to migrants from countries like Venezuela. It's also a way for Trump to put pressure on Maduro, because those citizens returning back are not going to like the new government they're under. They might not like Trump for forcing them back into Venezuela, but they hate Maduro even more. The returned migrants will likely try to organize resistance against the regime for the second time. But the issue of Venezuelan migrants is way bigger than just the US. There are many more Venezuelans living all over Latin America. Since 2015, over 7.7 million Venezuelans have fled the country. That's a significant portion of Venezuela's population. At its peak, the country had around 31 million people, meaning over a quarter of the population had left. And many of those fleeing are the country's most educated and skilled workers. which further compounds the brain drain and makes it even harder for Venezuela to recover. Key sectors have been hollowed out, from healthcare to education and engineering. If we look at the report of the UN in 2024, nearly half of the country's doctors and nurses had immigrated, leaving behind a healthcare system in shambles. Schools are closing as teachers leaving en masse or stop showing up together, unable to afford transportation or basic living expenses. The main destinations for these migrants vary, but most head to neighboring countries like Colombia, which has absorbed 2.5 million Venezuelans, or to Brazil, Ecuador, or Peru. Others take riskier journeys, heading to North America or crossing dangerous seas to reach the islands in the Caribbean. But leaving doesn't guarantee a better life. In Colombia, for example, Venezuelans often work informal jobs that barely pay enough to cover basic needs. Meanwhile, families are torn apart as parents leave children behind, hoping to send money back home. Despite these harsh realities, Maduro continues to cling to power, bolstered by allies like Russia, China, and Iran. His government paints a rosy picture of economic recovery, fueled by shadowy oil deals and barter agreements. But for the average Venezuelan, the reality couldn't be farther from the truth. This has major ramifications for Venezuela's oil industry, because in the meantime, the world is changing drastically, and Venezuela is just not catching up. As of 2025, Venezuela finds itself struggling to compete against new players and shifting dynamics in the global oil market. For one, the cost per barrel has fluctuated with market forces, hovering around $70 to $80 per barrel in recent years, but with pressure from OPEC limiting supply to keep prices high. However, many countries, especially in the Middle East, have modernized their industries, while Venezuela's oil production lags due to underinvestment and outdated infrastructure. This means that those countries have significantly higher profit margins. Venezuela is also competing with a wider pool of producers now, including U.S. shale oil, Brazil, and other OPEC Plus members. There's now an emergence of alternative suppliers in Canada, Brazil, and Guyana, who are rapidly expanding their oil industries, offering competitive alternatives to Venezuela's output. Canada's oil sands, though also producing heavy crude, benefit from better infrastructure, political stability, and proximity to U.S. refineries. Brazil has tapped into massive offshore reserves, such as the pre-salt fields, which produce high-quality crude that is easier to process. Meanwhile, Guyana, a relative newcomer, has become a rising star in the oil world. Discoveries by companies like ExxonMobil have catapulted the tiny South American nation into the spotlight, with production projected to reach over 1 million barrels per day within the next few years. These countries offer not just oil, but also reliability, something Venezuela, plagued by political instability and sanctions, cannot match. Then there's the issue of the oil itself. Venezuela's reserves consist primarily of heavy and extra-heavy crude, which is more challenging to extract, transport, and refine compared to lighter crude. And in recent years, many refineries have shifted focus to easier-to-handle crudes, due to the abundance of light crude now available from other producers. The country has tried to offset this by offering steep discounts, but even bargain basement prices can't fully compensate for the logistical and refining headaches associated with its heavy crude. So while other nations have adapted to the changing landscape, Venezuela remains stuck in a cycle of decline. And it's a vicious cycle of issues. As production declines, PDVSA's revenue shrink, leaving even less money available for maintenance and investment. This leads to further declines in production, perpetuating the crisis. As a result, Venezuela's market share continues to shrink, and its ability to compete on the world stage becomes more limited by the day. As we come to the end of this video, the central question still stands. Can Venezuela's oil industry rise from the ashes? It's a question that looms large over the nation's future. Recovery for Venezuela is certainly possible, as it's sitting atop the world's largest proven oil reserves. But it will require significant political reform, foreign investment, and a strategic pivot towards diversification. First and foremost, political reform is non-negotiable. Maduro's government, marked by authoritarianism and inefficiency, has lost the trust of both Venezuelans and the international community. A transparent, democratic leadership would pave the way for rebuilding not just the oil industry, but the entire economy. Without this change, any attempt at recovery will be a band-aid on a bullet wound. Investors need stability, rule of law, and the insurance that the money won't disappear into the black hole of corruption. Moreover, foreign investments will be critical. Venezuela's oil infrastructure is outdated, its refineries are in disrepair, and its production facilities are running on fumes, both figuratively and literally. Revitalizing the industry will require billions in capital and expertise that only multinational energy companies can provide. but attracting these companies will hinge on lifting sanctions and creating an environment conducive to business. Sanctions, particularly those imposed by the United States, have throttled Venezuela's ability to sell its oil on the global market. While these measures aim to pressure Maduro's regime, they also inadvertently choke the lifeline of an already suffering population. Lifting sanctions, however, must come with conditions. The international community must ensure that revenue generated from oil exports go towards rebuilding the nation, investing in infrastructure, education, and healthcare, rather than lining the pockets of corrupt officials. And oil alone cannot guarantee Venezuela's recovery. The nation's over-reliance on crude is what led to its downfall in the first place. Diversifying the economy is essential to future-proofing against global oil market volatility. Countries like Norway have successfully turned oil wealth into a diversified and sustainable economy. Venezuela would do well to follow suit. So, at the end of the day, Venezuela has all the oil in the world. 304 billion barrels, more than any other country. The country should be rolling in cash like Saudi Arabia, but instead it's dealing with a crumbling economy, political chaos, and some of the toughest sanctions out there. Corruption, mismanagement, and overdependence on oil wrecked the industry from the inside. And then US sanctions came in and slammed the door shut on whatever was left. Until there's a real shift in leadership or policy, Venezuela's oil will keep being a wasted fortune. Maybe in 100 years, once other countries run out of oil, things will change.